So, Andrew Witty, the former CEO of UnitedHealth, resigned yesterday. But before he resigned, about a month ago, he provided some insights into what was happening at the company. And there was disappointment in many areas of the business, which I think partly led to the resignation announcement yesterday. So, I wanted to dig deeper into this business because there's been a lot of development, right? Um, especially they announced, well, they didn't announce, but it was announced that the United Health Group is under investigation by the US government for criminal activity, and the share price is down significantly. And there is a lot of investors curious about what's going on with United Health stock. So I'm going to provide some more detail in the latest developments so that you can use that information to make a decision on whether or not you want to buy, hold, or sell this stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
About a month ago, the company already revised their adjusted earnings per share outlook for 2025 downward. They revised it to $26.50 for 2025. But just a couple of days ago, they updated even this lowered forecast. So about a month ago, they lowered the forecast to this range. And then about 2 days ago, they just removed the guidance altogether and said things are going so badly, we can't even forecast how low our profits will be this year. So we're just removing the guidance altogether. And then in that same announcement, the CEO said that he would be stepping down. Andrew Witty is stepping down. So, huge disappointment for United Health stock investors, and the CEO took responsibility and stepped down as a result of the poor performance. But Andrew Witty, before stepping down, gave investors a lot of insights into the latest developments. He said that it's important to recognize that it's United Healthcare and Optum are distinct businesses with different models, markets, and products. So these are different, right? It's hard to bundle them together and evaluate them all together because they're different with different models, markets, and products. And then he went on to describe the latest developments in the business. So in United Healthcare's Medicare Advantage business, they had planned for 2025 care activity to increase at a rate consistent with the utilization trend they saw in 2024. Instead, in the first quarter of 2025, indications suggest care activity increased at twice that rate. Twice that rate. So this is a large business with a long history of data, and their forecast was way off. It was half of the activity. And that was really troubling that a business with this much data, with this much history with clients and customers, to be that off base with its forecast. Now, there's a lot of unique situation going on in healthcare, of course, in the last 5 years. The COVID-19 pandemic changed a lot of things. Remember, during the COVID pandemic, many people reduced their elective activity. They tried to avoid going into doctors' offices, into hospitals, because they did not want to contract COVID. And also because hospitals were so busy, it was so difficult to get an appointment. But many things that people usually do, like regular checkups and maybe elective procedures, they kind of delayed and they put off, right? And so that could be one reason why they experience such a difficulty in forecasting care activity, because there was so much disruption in the last 5 years, right? The decline in utilization rates, the decline in elective procedures during the previous couple of years could be coming back now, could be coming back and then some with pent up demand for these procedures that were put off and delayed. And now it's people are saying, okay, we can't delay this much longer. We already put it off for a few years. We got to take care of this because we're starting to feel the impacts and we need to go in and take care of this. But the company did say that the increase in care activity was limited to their MA business and was not a factor in their commercial or Medicaid businesses. They also said that many of the current and new complex patients they serve are more effective by the risk model changes that we are in the process of implementing. To be sure, it's complicated, but we're not executing on the model transition as well as we should. And so here's more insight into why they made such big errors in their assumptions for care activity. The risk model perhaps was not a good model. The assumptions built into the model were way off point, and the actual results are turning out to be much different than what the company forecasted. And that's creating all kinds of havoc inside the company and creating the decrease in profits, creating what led to the CEO's resignation. So here's what they were planning on implementing, but I'm not sure if they will continue with this plan because the CEO resigned. Remember, that's one of the risks I highlighted when I did the video about the CEO resignation is that when a CEO resigns, there's a lot of question marks about how to move forward because of the new plan. And so they're ensuring complex patients most impacted by the previous administration's cuts engage in clinical and value-based programs. They're consistently engaging with members in their homes and post-discharge settings. They're assessing and updating the health status of new patients, especially those at high risk levels. They're to more effectively transition to the new risk model. They're investing significantly in improving physician clinical workflow. And finally, their Medicare Advantage plan designs and pricing for 2026 will fully be informed by these trends. In other words, they're going to increase prices. And out of all of these steps that they're taking, I think the one that's most likely to remain in place, even with the new CEO, is the pricing increases. Because now they have a reason they can point to for raising prices. And publicly, it won't be so much backlash for raising prices because they can point to all their difficulties and say, look, we're struggling and we need to raise price. Otherwise, we're going to go out of business or, whatever they say to investors and individuals to help alleviate, the backlash they usually get when they increase prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.